Hello, everybody. Today is the 7th of March 2026. I'm gonna record this video. It's gonna be short and swift because I can't really view screens for too long. So please be mindful of that. So I might not go into all detail, and I might even abruptly end the video when the yeah the like when the pain gets too strong, basically. So, yeah, we are here now. This was a magnificent move since the low, and I think we did the low very nicely. I said it's gonna go up, consolidate, and then go up more, and that's what it did. So, if you managed to invest right there and had the patience, yeah, 65% return, insanely good. Um, we did suggest Exxon, we did suggest Chevron, did suggest also in the chat, not in the reports, but in the chat, to also look for Shell. I think all of those companies like had a great return. And now we need to put this into context on how it's going to go, because we have reached the measured move target. As you can see on the world, there is a large panic around the Strait of Hormuz due to war, due to conflict, but that's how oil prices go up. Okay, the oil price don't go up because we are in a flourishing economy where everything's great and such. No, inflation usually becomes high, and this is when risk assets sell off. That's why we saw so much of a decline that we had in all of the markets. If we look at the S&P 500, we're down from the all-time high. And this is also my like my teaching chart. That's why you have a little bit of a couple of things going on over there. But this is what we expected. Okay, we said this is the line in the sand. If it goes down, it's gonna come down a little bit more, and this is how it looks like so far. Intermediate term target is 6,573. Let's see if we reach there, or if this is something bigger. Okay, it could be something bigger. Like we could get a sharp move like that, a moderate recovery like we got in 87. Not in 87, I'm sorry. I think it's in the 74. Yeah, 74 area. There was a big inflation wave coming, and then we could get another sell-off. Okay, that's not something that we should be believing that it might not happen. It may happen, and we're well positioned for it. Yeah. So about my positioning, I'm fully hedged. I also opened up a Nasdaq short. So um, I was expecting this ranging behavior, maybe another high still and then down. And so far, this has been playing out pretty nicely. If you try to trade this, you probably got chopped up. If you try to buy the dip, you probably got chopped up. So nothing here would have worked for you. And money making in this environment is uh, very difficult. And for everyone who says I'm a buy and hold investor, well, did you make any money? Did you make any money? That should be your question. And I would say since September, if you buy in monthly, well, you have been flat, okay? Flat for 171 days, zero return, nothing, okay? So that's why buy and hold not always works, okay? It always depends on how you play the game, how you invest. Investing is an art. It is not a skill that everybody has. And yeah, over the long term, the trend is going to go up still, but you want to avoid drawdown such like this. I know so many people I talk to, they panicked around here and they sold around here. This is where we bought, guys. This is where we bought. Now, this trend has been magnificent, and we have made a lot of money in this. And now I just think it's time to protect yourself. I think it is okay to keep the sheep back into the barn because they might get struck by lightning. Okay, and that can happen quite fast. Um, in my opinion, all of the media that is saying the Strait of Hormuz, it's not a big deal. The Americans are super strong. They're going to open it up in a couple of weeks. They also said that about Putin, that he would never attack Ukraine because the might of NATO and the might of USA might keep him from that. Well, we're 4 years away from that point. It's still going. The war is still going. So be open minded, don't have a closed opinion because markets can change. And the Strait of Hormuz has a very big difference compared to the attack from Putin on Ukraine. It is one of the lifelines of the economy, the way it is currently structured. I just want to remind you that something similar happened during COVID, where a tanker couldn't really move anymore and everything went up in price. This is when we had the big inflation wave. This is when we had the big helicopter money. Sure, it was paired with COVID, but you also had insanely high inventory prices. So I just want to remind you that markets go down in that environment. Okay, so the last time something similar happened, this was that. It was a bear market. Now, it wasn't a deep bear market. I would say everybody still has this feeling, okay, well, we had COVID, we have everything, we could recover. I just buy. I just buy. And this is exactly the sentiment I want to see for someone to get wrecked. Okay. You will have so many bar discussions, whatever, when you're sitting with friends, whoever made money in this market because all they had to do was buy and hold. They're going to say we had COVID, we had so much inflation, we had the Ukraine war and everything else. It's going to go up. Okay. You know when they also said that? They also said that during 2008. This is the exact same sentiment that we had around here. Okay, you had the big crash in the dot com. Then you also said we had huge inflation back then. We had huge influx of money. We had a huge crash. Everything would be hunky dory, and boom, it really knocked your socks off after that. Now, this was a much more vicious decline. So many people lost money. Less people lost money on this. More people lost money on that because there was real estate involved with that too. The amount of leverage was never this high. And you know when the amount of leverage was never this high? Exactly right now. Okay? So I'm not saying the market is never going to go up after this anymore, but I'm going to say that the times will probably change. The times for buy and hold, I would say it's going to be a risky strategy. Okay, let's keep it at that. Okay, let's keep it reasonable. So let's just say we get a 30% decline from here. That's going to be around the lows here again. Okay, and the price structure so far is suggesting that that is a large consolidation, my friends, where lots of people seem to have sold. They have sold here and they've sold here. There were buyers back to step in, but you can see just how price develops that it takes a lot of effort to push higher. Now, you're not getting any lift here. You could say, yeah, well, it could go up here and then just keep on going. Sure, everything is possible in the market, but that's not how we work. We want to see what the market tells us, and so far it's telling us that it's unable to kind of get above the 50% of this sell off. So, is it possible that lots of people actually sold here? And I mean by people, not the sheep that is going to be sheared, the pros. Okay, did the pros sell here? And so far, I would say so because you can see this line. This wasn't retrospect something. This is what I put in like it beforehand. So price has developed exactly as we expected it. Now we would want to see a lift up here and another push up like this to get everybody on the bandwagon that everything's fine, everything's hunky dory. But if this fails, you have a bear market, my friends. So the only thing that I'm currently watching, and I'm taking lots of patience in here. Note, I have a short position, so full disclosures aside, I make money if the market goes down. So if this develops into a failure above these highs, I'm going to be convinced that the buyers have gone, and you can get a big decline like this. And you see, when this happens, it happens really quickly. The only thing is, what happens afterwards? What happens afterwards is probably an up move again, but do you really want to incur a 30% decline if you made 30% last year? I'm not so sure about that. And if you didn't make any money last year, well, you might start playing like a pro then, okay? Because if you didn't make any money last year, you're a bad investor, okay? That's the way I would see it. So the analog to this is exactly here. This is also when Trump 1.0 was. This is his term. He causes bear markets every other year. There's no president that was ever there that created this many bear markets. So this is probably what we're up to. And you can see that the structure is very similar in the NASDAQ. So if we combine these three lines over here, you can see that we have pretty much a very similar picture. And it could be that the behavior usually is the same. Okay, so if the behavior is the same, we could take these lows over here and you would get, if you get the same thing with an overshoot, you get to our price signature price, which is exactly that 31% decline that I'm talking about. And it's a very similar structure. This was around the end of his term, okay? And therefore, the question will be here: is this enough? Is this going to push up and then come down, or just come down immediately? So far, I think there's lack of lift, so we might get a correction here. We could also have a weaker rally, like it comes down, it goes up, and then it goes down. That would be when markets don't repeat exactly. This was a V-shape push down due to COVID. Would this be a declaration of war from someone else? We don't know. We're never going to know. But this is, we just simply have to go along the way with the price. Therefore, I would say it's possible that we get another higher price, but I find it a bit more likely right now that we're going to get at least a double-digit correction, at least 10, 11%. Then we're going to see if this is going to get any lift from here. And if it gets a lift, we still have this rally to go. And then we're going to come down. Okay, so this is the short-term outlook. Now let's do this with a little bit of math and also put oil into context. Oil only goes up end cycle. Okay, it never goes up anywhere else. If you invest in oil, you want to be invested around the late cycle stages, because if the economy is bad, this is when oil is going to go up. Okay, when did we have the dot-com crash? Well, this was here in 2000. What did oil do? It just went up. Okay, late stage cycle. When did it come down? At the end of the cycle, 2008. I don't need to remind you. Then we had a good economy, a very good economy. We then saw the first cracks of it with the money printing in 2020, and this is exactly when it went up. Okay, so you have two presidents on the price history right now. I can show you many more, but this trading view chart only shows until 84, so I'm just going to stick with two examples. So here it went negative for a split second. It was 1/16th of a second. So everybody says, whoa, it went negative, but it was just for one tick, okay? Nobody was able to trade that. I know the people who traded it, they could not trade it, okay? So it never traded below there. Nobody was destroyed, but this is what popular media would tell you. Yeah, but this is the same type of crack that we had here. So we can take this as an analog. Now we have already a decline that was coming like this. So you have similar stuff like that going over here. This is also when real estate all around the world peaked. Check your German prices, check your Spanish prices, check your Czech prices. All real estate in all around the world has peaked since then. Even the mighty Canada fell at that point. They didn't make new highs anymore. Okay? And this is the big point. In America, real estate prices are still going up. So what you could get is a double peak cycle. And a double peak cycle usually retests the highs and then it comes down. And what have we seen so far? I've looked through the city statistics of America, and so far, I would say around 50% of all the cities have peaked. San Francisco, for instance, peaked already, but there's still like cities like Oklahoma that are going up in price. New York is also still going up in price. So there's still, like I would say, a little bit of lift, a little bit of demand there. But on aggregate, it still translates to higher real estate prices. But once this aggregation changes, and I think we are at that point at the moment, you will get a large real estate crisis where prices come down, rents go up. So if you're a rentier, I'm sorry. You're never going to have a good time. I'm sorry about that. This is just how it is. But for people that own houses, they are going to feel it. Okay, because interest rates are going to still stay up and high. This is contrary to what everyone said, which is interest rates are going to come down. No, I don't think so. I think the interest rates are going to go up because of inflation. And now I have evidence for that, and I want to present that to you with this spike in oil. Do you really think that anything that is being produced from now on and until oil prices come down again, which they will not, will keep inflation at bay? You gotta be a very big person that denies everything, that denies the evidence, if you still believe that, okay? I think this is gonna go up. This is gonna lift up everything in cost of living, and therefore you're gonna have a real crisis when money is really tight, and this is usually when the most people go under. We already have, for instance, in Germany, a record level of busts of companies, but we didn't have anything like this. Now, in Germany particularly, you have no nuclear power anymore. So there's going to be a dire time over there, and it is possible that the German real estate still makes another lower low here. Okay, I think the USA will peak with this, um, and let's look at the DBX or DBK or DBC even. We can also even look at the DBC chart. This is how I predicted it. This chart is active since 2020. Okay, I said it's going to come down. This is when I called the top. Look, this is mere perfection. You could say I'm a fortune teller, but I'm not. I just analyze data very well, I would say. And this is what's up, okay? It's already on the way. It's already on almost at the highs of 2020. So, yeah, we are going to see that. And you can see it kind of makes sense in terms of a double peak. Okay? So if that is the case, inflation is going to set to rise, and so far it has only consolidated, but this is going to go up. If it's going to go up, we know what to time that, okay? So we made money by the way of going up. So I know it's immoral. You shouldn't make money with food. You shouldn't make money with oil. But when the opportunity comes and you see it, you would be dumb not to profit from it, because why the hell would you destroy yourself if the entire world is going to go down, right? You and your family first. This is what I think is the best, and that has been materializing so far. And so let's go through our timing charts for now. Yeah, so I presented this in January. This is when it was around here. Now we have moved to 90. Okay, it was a big spike. I think this is going to last the same way. But you can see, in terms of our mathematical model, it kind of resembles it very well. If that is the case, we have started the last rally into the peak of the cycle when pretty much everything will sell off. So we're kind of out here. So this thing is going to be that, which is in around 2027 still. I couldn't pinpoint it too well. I'm not a fortune teller, as I said. But yeah, 2027 looks like it's going to be rough. And it could rise from there. Now, this is the larger scale chart which I wanted to show you. You can see that when the economy is running well, this is what during the 2000s when you had the dot-com bubble, it bursted in 2000. This is when you had the oil price rise that was epic in nature. The same thing you could say in our status quo, where the economy peaked. It was in 2018 for Germany, it was 2020 for America. Then they printed up money and, of course, caused this inflationary wave that was this. But if you correct for inflation, it really resembles this price signature. And also this. This is very similar to that. You see, we have a push down, then you have a horizontal range and another push down. You push down, horizontal range, and this last push down that is really weak. Here it was even stronger. I would say this is simply due to inflation. Therefore, price could not travel much lower than actually that. And now you're getting this up wave, which is exactly at the time where this bottom was created. Therefore, we should see a rise in prices here as well, which should exacerbate the conflicts as well. I'm not a person who calls for fundamental conflicts, but come on, this was in the data. If anybody's surprised by this, I'm sorry, you're playing the game wrong. So here we are at 90. This is a spike. We have reached the range highs of that. So what we could say this is that this is the emergence of a bullish cycle. In a bullish cycle, you still have a half cycle high. I would guess, because the price action was kind of very strong over here, that this was caused by panic. And if this panic holds, let me show you on the oil chart, it should translate into a first peak of the half cycle. So this should be your initial peak. It could even go and channel up like this, where it's a weaker leg. I think this was the midpoint of this panic. So it could go up, it's going to come down, and then it's going to consolidate here, and then you're going to get another inflation wave after summer. So if you didn't buy oil for your house, for instance, this is where I would do it. If I didn't do it, of course we did. So yeah, we are not really yeah, you know what I mean. We are kind of making money with that, and I apologize for that, but that's just how it is. So then we're gonna go up. How are we gonna go up? If let's say the model is sustaining itself, every model is wrong at some point, but then we have time until 21st of May 2027. And I don't know if you remember this, but I said no big sell-off was ever created in history during 400 years of history in a year 6 of a decade. So far, that remains to be true. This means for very many markets, for instance, the S&P 500, MSCI World, you still probably are going to just go sideways here. Okay, so I don't think. Let's say if I made you a little bit concerned about this, let's say this doesn't happen. This is just my model. Okay, what if let's take the Nasdaq for it. So if it just sells off, comes down, goes up, comes down, goes up, comes down, goes up, until 2027, then you might get a peak in April, and then you come down. This would make sense to me. Okay, so there was no sell-off in year 6 ever. Okay, so the data is strong there. I trust the data, not my opinion. And from 2027 on, you might get a large sell-off. So if you are still preparing, if you need to prepare for bad times, if you're losing your job, have like 6 months worth of salary left on your account, maybe also a bit of food supplies, maybe a bit of water, just to prepare for that, because this could be a very detrimental event. What would cause that? I don't know what it will be. I'm living in Germany, so I might even say, okay, now that the oil from the south is gone and we don't have any nuclear, is this a blackout scenario? It might be, okay? It might be. So I'm not sure. So we kind of only speculate. But yeah, if it happens, it's probably going to happen next year, not this year. So sideways, up move, probably down, okay? So this is also what would translate into higher oil prices still into 2027. If the market peaks in April, it would make sense that oil peaks around March or May, or 1 month before, 1 month later, has done that historically speaking. Here it also peaked earlier. This is, I think, February of 2022. This is when the markets had like a last lift up. This was the Putin crisis, but the oil prices were going up. So in the media, even you had this. This is where they covered it. Like oil prices are going to go up, and then you had this last exhaustive move. Everybody knew that oil is inflation going up, and so on. They all caused this to Putin, but nobody talked about what was that. Okay, nobody talked about that. They just blame Putin at this point. So it's 3 weeks of price action. This was fundamentally designed in a way where the stimulus and everything caused this one to go up. This is Putin, okay? This is Putin. So yeah, Putin wasn't solely responsible for the prices, and there was something else there too. Okay, so then we have the S&P 500. You can see this is just a short-term cycles model. We have a 20-year cycle in this. It is currently peaking, and I could not show this on the charts. And gosh, my eye hurts right now. Yeah, we take the low, the high here. You could say that this is the high, this is the high. It doesn't really matter. What matters only is that we can't really time the highs here too well. But the low was perfectly matched, and then we had this up move. But this up move is also now exhausting, right? So if this is exhausting, this is supportive of our idea that the economy is gonna get hit quite hard with what's currently happening, and the war might really cause a lot of pain. Okay, a lot of pain. And therefore, yeah, I think the market's gonna go down or sideways. So no real returns for buy and holders being able here. I can give you some instructions on how we swing trade this. I think the oil play was really good. There is going to be some more things to come, but buy and hold, I think that's over. Okay. Yeah, until, well, you see it here, 2027. We're going to have to time this at some point, but this is down from here. Bitcoin, we matched the top perfectly. It's super glad actually. I didn't believe that I was able to sell the top, but I did. Like not the exact, but 115K was my exit price on Bitcoin, and I think it was 4,500 on Ethereum. You in the chat, you know, when I wrote to sell, like if you followed, let me know in the general chat where you sold. But yeah, this is how it looks like. And what I find very interesting here is this looks like a radio frequency to me. Okay, I did a lot of studies in radio frequencies, and what you can see is a carry signal here. So you can see that, right? And then it goes up, and what it would do is that this is a carry. So if that is the case, we have a good window of timing going on over here, that we can modulate our timing signal in the carry as well. So this internal signal is basically the ups and downs, the ebbs and flows within a trend, but the larger trend is this. So if I measure this, let's say this is the peak, and if I measure this from this to this point, which is where the carry frequency bottomed, we could try to extrapolate this from here, because this would be the analog of that. And let's do that together. If we use the Bitcoin USD on Coinbase, we could measure the time. Look at this magnificent, isn't it? Worked out perfectly. The only thing that I was expecting is a bit higher, but yeah, we might get that. Okay. All right. So this is the first peak. So I'm anchoring the time here. This is it. To that, this took around 638 days. Let's just copy that and put it onto our analog price action where we form the peak. Then we would have time until September of 2026. That is coincidentally the same low that I was suggesting in the Bitcoin 4-year cycle. If that is the case, we should form this final low around this point. And last cycle, I was also able to pinpoint that. You know, my big fumble was here where I couldn't trade that. But other than that, I played this cycle really well. And yeah, gonna look out for September then, because if now our large grand picture evolves, this should lead to a bear market rally. Why do I say bear market rally if this is the 4-year cycle? Simply due to we already having a 4 times 4 year cycles. Okay, when it started in 2009, you could now finish all these cycles, and there's one particular cycle, which is a fifth and sixth iteration. They sometimes fail, and if they fail, they lead to a cycle that is weaker, but swift and sharp. Okay, so if that is the case, we could, for instance, I'm not predicting any price here, but let's say we go down, we go here, so don't take this as reference, this is not the price, whatever, and then we move up. This is how it could look like. Okay, so you get like 1 year of good price action into 2027, maybe even April of 2027, and then you come down. Okay, so this is what I think would fit the narrative here, where we get one last grasp in the economy as well, where you try to get out of this situation with money printing again, but the war exacerbates whatever happens. You get this, and then you push down. So this is what I'm thinking here. Yeah. I think any other comments we would need to wait until I have more information. Now gold is interesting because the 20-year component shows us low. This was a good high. This is so good. I got rid of my holdings in terms of like the 50% around here. And then I waited until this rally over here, and then I sold the rest. And I also got rid of my physical here because I'm not sure if this is gonna go for another high. Okay, this is the 20-year component, which has a high around like September, October of this year. And then we're going to go up into 2027, which is exactly the same as the other market. So that's interesting. That also reflects in this data. But this is the 9-year component. So it's just down. So I'm not sure which one will play out here, which is more active. Um, and if you combine those, it doesn't really look good, right? You just have a small smidgen over here, which is again the same timing window as we saw, but it might just be a weak rally where it doesn't make a lot of sense. So I'm happy to sell my physical bars here as well, and just wait and see what the market tells me, right? This is our good advantage because we don't only time the market, but we also try to price the market. So yeah, this is what I have in mind. So yeah, it's a difficult picture. It's difficult to make money in this market, but I'm happy that we were able to do that. Even I think I showed you that yesterday that the market was down 2%, but if we did the same things as you did, we made money. All right, we made money on so much. This was insane. Everything down. So this is also when I said, wait. So you want to tell me that when I need the money the most, everything that is associated with risk, everything where I put my money in on a monthly as a buy and hold investor is going to go down in value? Oh, really? Oh, really? Did you think that this was true? Yeah, of course. And everything where what you need goes up in price. This is just how it goes. Welcome to the world. Okay? All right. So that's the update. If you have any questions, just ask in the chat. Hopefully, you learned something new today. If you did, please consider checking us out on our channel. All right. Take care. Bye bye.